Okay, so I am going to be explaining what is it, our provision for bad debts. But I am going to be using the T account because somehow it seems a bit more easier explaining it with the T account. You will see as time goes on that like it's easier, like just for you to be able to understand fully what happens regarding provision for bad debt. Okay, so I've decided to come up with my own example here. And we have the debtors control for 3 years, and then we have the provision for doubtful debts, which is 10% per year. Okay, first thing first, the most important thing that you will need to understand is that like the debtors are usually affected. That is like when people buy from the company but buy on credit with like a credit term and the plan of paying back within a period of time. So what happens is that um usually it happens that some debtors don't pay back. You get it? If they don't pay back, therefore it means we will have to account for what? We have to account for bad debts. Okay, so with bad debt, we also have an issue of like companies have had like problems with people buying and then thinking that they will receive the money only to find out that some of the debtors don't end up paying back the money. So as a result, they ended up coming up with this thing which we call provision, provision for bad debt. Yeah. So provision for bad debt is actually the company coming up with ways that they can protect themselves from people not paying. You get it? So the percentage, we don't work out the percentage. You won't be asked to work out the percentage most of the time, but it is most likely to be given to you. Yeah. So we have issue of bad debts, people ended up not paying, and then companies coming up with ways that they can sort of like offset the loss from bad debt, because bad debt, it means what? It's money that we'll never ever gonna get back. You get it? And then with the provision is that like we are estimating from the debtors that we have how much or how many percent are most likely not to pay us back. You get it? So an example here, if we have 30,000, so we're saying out of the 30,000, we are most likely not to get 10% of it for the year. You get it? So this account, the debtors control, we also have the provision for bad debts. Think of this as more like when we deal with the issue of depreciation and an asset. You get it? So if we're working with a depreciation and an asset, you can just consider it as like the debtors allow a debtors control account as your more like your asset account. It can be maybe equipment, a vehicle, whatever it is, right? And then the provision for bad debts, think of it as a negative asset. A negative asset, it can be something similar to um, your accumulated depreciation, or let's say like your accumulated depreciation account. So we have what? We have debtors control, which we assimilate it to what? To as an asset account, and then we have the provision for bad debts, which is we assimilate it to your accumulated depreciation, how you tackle your accumulated depreciation. And then we have provision for bad debt adjustment. Provision for bad debt adjustment, think of it as like your depreciation account. You get it? So you know that the depreciation account is always offset to what? To your profit and loss account. So this is the amount that will go straight to our profit and loss account. I don't know if this is clear. You are more than welcome to pause the video, replay the video until it makes sense. Okay. Um, with that now, let's see if we can put the numbers and try and make it more practical. Okay, so here we're starting 2019. So with 2019, our opening balance for the debtors control, this is an amount that is in the balance sheet. So 2019, the debtors were owing how much? 30,000 rands. Okay, so this is 30,000 rand that they are owing as in the opening of the debtors control account. Okay, so this is clear, right? Okay, so with that opening, in the provision for bad debt for 2019, obviously we have to account for it. So in 2019, accounting for the provision for doubtful debt, obviously we will say 30,000 multiplied by 10%. 30,000, if you multiply it by 10%, you can do it in your calculator. You pause the video, you calculate, and then put amount. Okay, I am getting 3,000 rands. So 3,000 rand is what is the 10% of 30,000 rand. So here we go. We have the opening balance for this 2019 year. Obviously, you will have to close off this account, right? And as you can see here, it's closed off to what? To provision for bad debt adjustment. Remember the difference? This is just provision for bad debts. And then we have the account that says provision for bad debts adjustment. Yes, so that's how I said you can consider it as like your depreciation account. Okay, so for this one, obviously we will take it down here. So it means that in the 2019 year of assessment, this was the 3,000 that was adjusted. You get it? And this same amount was the one that was then offsetted to the profit and loss account for 2019. Questions? You are more than welcome to text and ask the questions. Okay, so this amount of money, the 3,000, obviously went straight to our profit and loss account in that year. Okay, so we're now moving to 2020. Okay, so with 2020, now they are telling us that the balance for 2020 is how much? Is 40,000 rand. So with this now, we will say balance brought down, right? Balance brought down is for 2020. Then that's how much? That's 40,000 rand. Okay. So this is the amount of money that is owed to the company that we're expecting to receive from the debtors, right? 40,000 rand. But with that said, we still know that out of the 40,000 rand, we will only get 90% of it, and 10% of it is most likely to end up being a what? A bad debt. So as a result, we have to do what? We have to make provision for it, just in case we don't get the 10% of the 4,000 rands. Okay, so with that now being provisions, so with our statement here, we will have to account for it, and then we say provision for bad debt. Remember, it's offsetted to our provision for bad debt adjustment account, which is the one below here, right? So this is what year? This is 2020. Okay, so this is clear now. And then if you say 40,000 rand, this one here, multiplied by 10%, you should be able to get how much? You should be able to get 4,000 rand. So 4,000 rand is 10% of 40,000 rand. You get it? So this is more like a balance brought down of this account. You get it? Okay. I don't know if you notice, but Oops, I don't know what happened here. Let me see if I can just put a text here. Okay, here's the interesting thing here. If you notice, if this is a balance carried down here, it means what? There's a difference between 3,000 rand and 4,000 rand, right? So the amount here, the difference here, will have to account for it. If we say 3,000 rand minus 4,000 rand, you get how much? You get 1,000 rand, right? So basically, it means that there was a movement that happened. Actually, there was an increase of 1,000 rand in the year, right? So with this 1,000 rand now, it means what? It means that this is an amount that we will take down to our provision for doubtful debts. We're not gonna put what is it? We're not gonna put 4,000 rand here as a provision for bad debt, but we are going to put what? We're going to put 1,000 rand for which year? For the 2020 year of assessment. So provision for bad debts for 2020 year of assessment. Provision for bad debts. Remember, I'm abbreviating here, but you're not allowed to abbreviate in your exams. You have to write full words of everything. So this means that the balance here, the balance carried down here, it's going to be how much? 4,000 rand. So the 4,000 rand is like break down into two. I don't know if it makes sense. So this means that for our profit and loss statement here, the amount that is taken straight to our profit and loss statement, or rather say the income statement, it's going to be, can you guess how much is it? How much are we taking to our profit and loss? It's okay. So the amount that we're taking straight to our profit and loss statement is going to be 1,000 rands instead of the 4,000 rands. So we are taking what? The difference between opening versus closing. When we opened the statements, we had 3,000 rand for doubtful debts, and then at the end we had 4,000 rand. So what's the difference? The movement that happened between 2019 and 2020 was 1,000 rand. So this is the 1,000 rand that goes straight to what? It goes straight to our profit and loss statement. So this means that the balance here, it's going to be 4,000 rand, and the balance here is going to be 4,000 rand. Okay. Accounting is easy, it just requires practice. Okay, doesn't matter. I know it's just a bit skewed. Okay, so we are done with this one. Here's the interesting thing now here. If you notice for 2021, the balance is slightly different from the one in the previous year, right? So it's what is a bit lesser, right? It has moved from 30,000 to 40,000, and now it's currently sitting on 25,000. Okay, let's see if we can work it out. Okay, it seems like my video will run out now, so there will be a part 2 of us explaining this interesting scenario on this one here. Okay, next video I am explaining what happens with the 25,000 rand. Okay, so we are continuing with where we left off. Okay, so we say that the balance brought down for 2021, it's now how much? It's 25,000. Okay, so with the 25,000 rand here, obviously it means what? We have to account for the what? The doubtful debts for this amount of money. Okay, so here's what you need to notice here is that like there is a decrease. 2019 we had 30,000, then we had 40,000, and then now we're currently sitting on 25,000 rand. So it means that what? It means that we sold less in terms of our debtors, right? Compared to the previous 2 years. And also we still need to do what? We still need to account for the 10% per year for doubtful debts. Okay. So we will do the same thing as this one here. Okay. But there is okay, I'm just gonna do this like we did it, and then I will explain my whys. Provisions for bad debt adjustment. Don't forget that, because we are going to equate it to this account below here. Okay, so this is for 2021. Okay, here's the interesting about this thing, this one is that like when you say obviously 25,000 times 10%, you should be able to get 25,000 rands. Oh, sorry, 2,500. Okay. Okay, so this is the amount of money that is currently sitting here, right? Okay, here's the thing that you need to notice. If you look at the 4,000 rand from 2020 versus the 2,500 rand for 2021, obviously there is a decrease, right? Like we provisioned 4,000 rand, that's out of the 40,000 rands, 4,000 we're mostly not likely to get it. But this year we are provisioning far less than last year, right? So this now becomes what? It becomes an income. The difference between this one versus this one, it's what? It's an income. So provision for doubtful. Provision for, okay, I'm just, yeah, for bad debts or doubtful debts. It's the same thing. Okay. Provision for bad debts for 2021. It's what? It's an income. And an income, it means what? It's on the, we put it on the debit side here. Why the debit side? It's because this balance increases, what is it? This account increases on the credit side. So this one, it's sort of reducing what we currently having here. Because remember, these are the balances. This is a balance. This is more like balance carried down. You get it? So the balance carried down for both sides must be 2,500 rand. If it's 2,500 rand this side, even this side, it has to be 2,500 rand. So this is more like me saying here, balance carried down. Okay, I'm just balance CD, right? So our balance CD for provision for bad debts, it's going to be 2,500. And this is for which year? For 2021. 221. You get it? So the question now is how, if down there it's 2,500 rand, it means what? It means that we need to find out then how much is the provision for doubtful debts there at the top of the situation, right? So something that we know and something that we are aware of is that like if you say 4,000 rands minus 2,500 rand, you should be able to get what? You should be able to get 1,500, right? So 1,500. So this is the for one for 2021. And then the one that we put in for last year, then we can say this was BD, for example. 2020. This was 1,000 Rand. You get it? I don't know if you have a question, but this was what was sitting in the account last year, right? And then this is what is sitting on the account for this year, right? So if you add these two together, you get the 2,500. But that's not the most important thing. The most important thing is this amount of money. This is the amount of money that will go to the statement below, and it will go straight to our profit and loss statement, or let's say our income statement. So in your income statement for the 2021 year of assessment, your provision for bad debt is going to be 1,500. But this amount of money, it's going to be at your operating profit. We have your sales, cost of sales, then you have profit, right? And then you have operating income, right? Or other income per se, right? So within your operating income or other income, this amount of money is going to be as part of your income, because we provision less than last year. You get it? So to make it easier, I'm just gonna write something here, because it's like, what are you saying? Okay, so say this: if balance sheet is more than calculated, then it's what? Income. Okay, so let me try and explain the statement. This statement, I am saying, if what's on the balance sheet is more than what I have calculated, then it means that whatever I'm getting, it's going to be an income. So let's say here you had the trial balance that was shown there, right? And as it was shown there, they showed 4,000 rands there, right? And then you calculated with the percentage, and then you found out that actually the difference between what is on the what is on the thingy on the balance sheet is 1,500 rand. You get it? So the 1,500 rand was like sort of like, okay, let me start over. This was on the balance sheet, right? And then current doubtful debt, it's 25,000 rands. And then you find out that actually the 2,500 less this one, you get 1,500 rand. So the 1,500 rand is what it's going to be income. Let's say now it was the reverse, and we say if balance sheet is more than, okay, is less than calculated, then it's an expense. Okay, I'm explaining this. Here you are given this amount. They're saying doubtful debt, a provision for bad debts in the trial balance is 3,000 rand, and then they're telling you that currently the debtors control is sitting as 40,000. You get it? So you say whether 40,000 times 10%, and you get it 4,000. You get it? So last year we provision less than we provisioned this year. You get it? So last year now we said 3,000 rand will go for doubtful debts, but this year suddenly we're saying 4,000 rand will go to doubtful debts. You get it? So it means what? More money is going to be spent. You get it? More money. We are spending more money this year for in case people don't pay. So this is what? This is an expense. It's coming out of our pocket. The one at the top, this one at the top, when we said if balance sheet is more than calculated, we're saying in the balance sheet last year, they said 4,000 is most likely not to be got, like not to be like recovered. Yeah, that's the way. It's most likely not to be recovered, right? And then this year, however, we realized that actually only 2,500 is most likely not to be recovered. You get it? So somehow the difference here, it's going to be done what? It's going to be in income. We are provisioning less. We are taking out of our profits to offset for in case people don't pay. We're taking off lesser than we took last year. You get it? So the difference from that, it's what? It's an income. It's money that would have been spent, but it's not going to be spent. So it has to be what? It has to go back to our income statement. I hope it makes sense.